questions. Okay. The next topic is consolidation. Consolidation, or you even call it as a global consolidation system, or GCS. That's the term which is used in Oracle, global consolidation system. Okay. So what is consolidation? What is the process involved in consolidation, and why we need to do consolidation? It's a very important topic. Okay. So Reliance Group has got its headquarters in India, and Reliance has got its operations in India, US, Canada. Okay. So if Reliance want to run a kind of a report, okay, they can go to the Reliance INR ledger and run a kind of say trial balance report, or any kind of your financial statement to check what exactly are the balances looking like, wherein all the details will be in a functional currency of INR. Okay. Similarly, if they want to see how US business is looking like, they can get into the Reliance USD ledger and run some kind of a report. Similarly, for the Canada, they can get into the Reliance Canadian ledger, run some kind of a report. Maybe it could be a financial statement or something else, which will show how the business is looking like in Canadian ledger. But there is no, at this stage, there is no way wherein the headquarters or the top management sitting in India will be able to know the position of the entire group assets. That is, when I say entire group, the position of all the ledgers: INR ledger, USD ledger, and Canadian ledger. Because three are different ledgers and three are different currencies. So there is no single view through which he will be able to see the data of all three ledgers. That's where consolidation will come into picture. So generally, what most of the companies who operate in multiple countries will do is they will create one more ledger called consolidation ledger, and then consolidate or move the data or copy the data from all these ledgers into consolidation ledger, and then they can run a report from a single consolidated ledger, which will give you a view of all the ledgers. Okay. And in order to do that, the first thing what they need to do is they need to run the translation process in all those countries or ledgers where the functional currency is not INR. Okay. In this case, for Reliance INR ledger, the functional currency is INR, so you need not do any translation. For Reliance USD ledger, the functional currency is USD, so you need to convert all the USD balances into INR and keep it aside. Okay. And then for Reliance Canadian ledger also, you need to run a translation process, convert all the balances from Canadian currency into INR and keep them aside. And then you will run a process called consolidation, which will pull the data from Reliance INR ledger where the balances are now in INR currency, pull the data from Reliance USD translated ledger where the balances are in INR, and then pull the data from Reliance Canadian translated ledger where the balances are in INR, and then you can add them all the three. As you know that you can add only apples and apples, you cannot add apples and oranges. So that is the reason why first you need to run a process called translation under USD ledger and Canadian ledger, convert them into INR, then you can add the balances or convert all those things and keep in one ledger, consolidated ledger. So wherein the balances will flow from INR ledger, USD ledger, and Canadian ledger. Any questions here? It is very important you need to understand first the concept before we proceed with the steps involved in the consolidation.
Yeah, Arvind, when you say the translation, right, to convert in the respective USD or Canadian ledger, if a company is operating in multiple regions or multiple countries across the world, so in general, do we have any automated process to run that translation, or we every time we want to run for a particular target currency, user supposed to go to that form and select all the parameters with the individual currency which we supposed to convert?
Okay,
is that the only way, or any alternate option?
Okay, it's a good question. So I'll take our current client as an example. In our current client, we got 25 different primary ledgers. Okay, in 25 countries we are operating our business, and we got 25 ledgers. For each of these 25 ledgers, we got a different functional currency. So we got say USD ledger, INR ledger, Euro ledger, JPY ledger, Italy ledger, Korea ledger, and so on, Singapore ledger, and so on. Okay. So what we do is the first step is running of a translation. Okay. I mean, I'll come to your point a bit later, Niranjan. Okay. So in our current client, we got ledgers in 25 countries, and we got all these 25 primary ledger. And at the top, we got something called consolidated ledger. And the functional currency of our consolidated ledger is USD. So what we are doing is we are running a translation. We are getting into INR ledger, running a translation process, converting these INR balances into USD. We are getting into the Euro ledger, running a translation process, putting a target currency of USD and converting all the Euro ledger balances into USD, and similarly for JPY and Korea. So, and then at the end, we are running a consolidation process to pull the data from INR ledger with the function INR translated ledger where the currency is USD. We are pulling the balances from Euro translated ledger, JPY translated ledger, and Korea translated ledger into consolidation ledger, and the data is also coming from the USD ledger into consolidated ledger. So in a single view from a consolidated ledger, we are able to pull the balances of all the countries. Okay. Now to answer Niranjan's question, is there any automated way of running the translation process in a single go for all the 25 countries in my current example? Yes, that is possible. So in order to do that, what we need to do is we need to have a one particular responsibility which has access to all these 25 ledgers. Okay. And then if you go to this translation process, currency translation. Okay. Here you can see there is something called ledger slash ledger set. Okay. So what is ledger set? Ledger set is a combination of ledgers. So what we have done is in our current case, we have created a new ledger set. We have given our ledger set name as, say, in this example, you can say Reliance ledger set. And this ledger set includes INR ledger, USD ledger, so Canadian ledger. Okay, for our current example. And then I'll show you that ledger set screen. Okay, then in the ledger, in this particular screen and the ledger slash ledger set, instead of selecting a ledger, I select the ledger set of Reliance ledger set. Okay, and then everything is same, like target currency is INR, enter the period and click on translate. So that means in a single go, I am able to do the translation of all the ledgers under that particular ledger set. Is that clear, Niranjan?
Yes, yes.
Okay. But of course, there are some limitations to the way you can create your ledger set. Ledger set is also one of the topic. Okay, but anyways, like as the time has come, like now I'll cover the ledger set also. Ledger set is a combination of ledgers. So there are some users, like in our current client we have got 25 ledgers. For each of the ledger we got different responsibilities. So we got general ledger supervisor INR ledger, general ledger supervisor Euro ledger, general ledger supervisor JPY ledger, general ledger supervisor Korea ledger, and so on. But our corporate office is in US, so the users in corporate office have got a responsibility, and we have given to create a responsibility by name general ledger supervisor comma all ledgers. That is the name which we have given. So for that particular responsibility, we have given a GL data access set of Reliance ledger set. I mean, like in our case, like it will be my client name ledger set. So through that particular single responsibility, I will be able to view the data of all the 25 ledgers. I can run the reports for all the 25 ledgers. I can run the translation process in single go for all the 25 ledgers, and so on. Okay. So wherever in the forms you can see the word ledger slash ledger set. Okay. In all those forms, you can perform a functionality which is provided by that particular form in a single go for all the ledgers under that particular ledger set. Okay. Now I can show you the ledger set screen. Setup, financials, ledger sets. So what we'll do is we'll create one Reliance ledger set. Reliance ledger set. Some short name. Reliance ledger set to group all ledgers. That's the description. And what is our chart of accounts? Reliance accounting flex field. And what is the calendar under Reliance chart of account? We have used Reliance calendar, right? Okay. So add all the ledgers under to be included under this Reliance ledger set. Okay. 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 So if you observe in my, can I go to the, yeah. So what I have done is for the Reliance INR ledger, Reliance USD ledger, and Reliance Canadian ledger, our chart of accounts is same. But purposefully, in order to show some other functionality in future modules or in future topics, what I did is for all these three ledgers, I've used the same chart of account. But purposefully for USD ledger and Canadian ledger, I've used a different calendar. I did not use Reliance calendar. The reason being, Reliance calendar, if you remember, we have created a Reliance calendar where the start of the fiscal year is April and end of the fiscal year is March. But whereas for the USD and Canada, I've created a calendar where the start of the fiscal year is January and end of the fiscal year is December, because obviously US and Canada follow the normal calendar. So that's the reason why I've created a calendar where the start of the period is January and end of the period is December. So the calendar or the period type for these two are different compared to the INR ledger. So in the ledger set, the the limitation of the ledger set is you can group only those ledger which has got the same calendar. If the calendar is different, you cannot group them. So in my current example, unfortunately in the current case, I cannot group all these three. I can group these two. The reason being, for Reliance USD ledger and Reliance Canadian ledger, I used a calendar of accounting. That's the name of the calendar, and it's the same calendar for these two. So that is the reason why if I select a Reliance calendar, if I click on drop down, I'm not able to see Canadian and USD ledger. I'm able to see only INR ledger. For the time being, keep this consolidation ledger aside. Okay, I'm able to select only INR ledger. So now what I will do is I will change this calendar to accounting with I think I've used the period type of month. Okay, and now click on this drop down. I can see Reliance calendar and Reliance CAD ledger and Reliance USD ledger. Okay, so from our current structure perspective, I can have a ledger set which includes only these two ledgers. I cannot include this. In our current client, for all these 25 ledgers, we got the same chart of accounts and we have the same calendar based on our business requirements. So that is the reason why we were able to create one ledger set which includes all the 25 primary ledgers. Okay, so that means as far as the running of the translation process in a single go is concerned, here in our current example we have got only three ledgers, and out of these three ledgers it is not required to run translation for INR ledger because the functional currencies are already in INR. We need to run the translation process for USD and Canadian ledger, and for this USD and Canadian ledger your chart of account and calendar are same. Hence you can create one ledger set, and using that particular ledger set you can run the translation in single go. Does this answer your question, Niranjan?
Yeah, one question. Yeah, to some extent, Arvind. But one question, like, let's take a scenario of an MNC company which is headquarters in USD in US, okay, but it operates in INR and any Eastern countries, okay, which has different calendar structure altogether with the legal authorities. Like in INR case, it is April to March, right? But when you do same calendar for that ledger, when you're defining INR ledger in the local legal authorities in India for that MNC company, right? You obviously need to choose a calendar which follows that legal authority process, right?
Yeah, April to March. Yeah.
So, but how can you create the same calendar in that case when you're defining that INR ledger, which has equal to USD follows January to December period?
Okay, so in this example, I know like US and Canada follows January to December, so that is the reason why I have created a calendar of accounting, and hence for these two ledgers I can create one ledger set. Okay, but here are from a local law perspective, as the calendar is different, so unfortunately system will not allow you to create a ledger set. And the only option left for us is to run the translation process or like use the functionality individually based on the data access assigned to the responsibility. So there is no way for us to create one ledger set to include all these three ledgers, as the calendar is different. That's what Oracle says. Unfortunately, that's the functionality. And here you can see, I don't know what exactly is the reason behind providing such kind of functionality, but when you are creating a ledger set, you can see at a header level, you need to mandatorily select the calendar. Then only you can put your cursor in the what do you call a line level, and in the line level, it will display only those ledgers which follow this particular calendar.
Yeah, I got that point. So it's what we're saying is the system is not ultimately good enough to handle ledgers having different calendars to
Okay, so
create a ledger set.
so this limitation is only for the ledger set. So bear in mind, you can still use the functionality the way you want by going to the what do you call the corresponding responsibility. But as far as the ledger set is concerned, that's the limitation. Okay,
Okay,
so
Arvind, does it need to have even chart of accounts the same, or it is fine with the chart of accounts
no, both you can see chart of accounts as well as the calendar.
as well as? Oh, okay.
Okay, so we
But
are
ultimately, chart of accounts can be same, right? I mean, it doesn't have an impact. Usually, in terms of legal authorities, chart of accounts may not be a point for showstopper for the legal authorities, right?
generally chart of accounts, we will follow the same chart of account throughout all the countries, because chart of accounts only just
Okay.
what do you call it's a group of segments. So that is the reason why whenever in any implementation project, when you are designing the chart of account structure, that is the number of segments, you need to take into consideration the reporting requirements, other requirements of all the countries, because it is always suggestible to go for a single chart of account structure. Your currency will differ, yes, your calendar will differ based on your country requirement, but it is always suggestible to follow a single chart of accounts for your entire what do you call group, or for all the ledgers. Of course, for some specific business reason you cannot go for a single chart of account, then that's a different story. Okay, but still from a system perspective, yes, you can have a different what do you call chart of account for your INR ledger, different chart of accounts for USD ledger, and different chart of account for Canadian ledger also. Okay, so I will give my example. In our current case, what we have done is for all these 25 countries, chart of accounts is same, chart of accounts is same, calendar is also same. Okay, currency is different. Okay, then you can ask a question. Okay, you agree with currency and the chart of accounts, but you can ask a question as to how come the calendar is same if your company is operating in 25 different countries. Am I right? So this could,
Yeah.
okay, this could be a question. So the way we have done our structure is, we have got 25 primary ledger. For 25 primary ledger, same chart of account, same calendar, currency is different, and for all these 25 primary ledgers, we got one secondary ledger. Again, second ledger is one of the topic to be covered. Okay, but for the time being, you can understand like a secondary ledger is linked to a primary ledger. So for each of the primary ledger, we got one secondary ledger. So for INR, we got INR secondary ledger. For euro, we got euro secondary ledger. For JPY, we have got JPY secondary ledger. And what we have done is, in these secondary ledgers, calendar is the local calendar, currency is again same INR, which is same as your functional currency. For euro, calendar is local calendar, and currency is same euro. So in our case, for all the primary ledgers and secondary ledgers, only for the primary currency, for the primary ledger and secondary ledgers only, the currency is same, the calendar is different, and in some cases even the chart of accounts is also different for the primary ledger. So to meet the local reporting requirement, all these INR ledgers or the primary ledger, your euro ledger, GBP or KRW ledger are following the what do you call US GAAP chart of accounts, that is as per the US law, whatever the chart of accounts which are defined, we are following all those things. And calendar is also as per the US law, so that it is easy for us to convert all these things into USD and then get into consolidation process. But to meet the local reporting requirement, we created one more INR secondary ledger, and for each of these INR secondary ledgers, the calendar is local and the currency is also local currency. I mean, like currency is same as your primary ledger currency, but your in some cases chart of accounts is also local chart of accounts. So that means what will happen is whenever you enter a journal entries, I will talk more about the second ledger in a while. But at a high level, the entries whatever is you enter in primary ledger gets automatically copied to your secondary ledger, okay, based on the chart of accounts mapping. And then in the second ledger you can make few more adjustment to meet the local reporting requirement, and then run the reports out of your second ledger and give it to your local authorities. Okay, so again this structure whatever I am talking about, this 25 primary ledgers wherein all the primary ledgers chart of account is same, calendar is also same, but currency is different, something like that. This is again all depends on your business requirement. So this is one way of creating your primary ledgers and secondary ledgers. But for other country, for other company same within the US which is operating in 25 different countries, the structure could be somewhere different. So there the structure could be like all the second ledgers may be following the, all the primary ledgers may be following the local gap, but second ledgers may be following the US gap, something like that. It all depends on how do you configure your system. Okay, there is no hard and fast rule saying that always primary ledger should have a calendar which follows the local gap, or second ledger should have a calendar which should follow the US gap, something like that. Okay. Okay, so
Okay, so in a nutshell, if I understand it correctly, the example you take from your current client, right? Like all the primary ledgers, as you're using same currency, same calendar, and sorry, same COA and same calendar, but different currency. So that means the activity when they're performing any transactions on daily basis, right, day-to-day basis, the users whoever is accessing the primary ledger responsibility for keying in journals, right, they should aware that though they are in the respective country, but due to the restriction over it, that is why they are creating with a USD journal. It's a kind of a user training. It's not like you got the point. What I'm
I
highlighting,
understand.
right?
It's a very good question, but it's a decision taken at the time of implementation. And again, it's not a system limitation. It's how the business users want. It's how the top management want. The top management want, but only the local user may get confused, but only for a little while. But they should be properly trained that this is what is the business process and this is what is agreed at the time of implementation. There is no system limitation here. Okay, so all the users are already trained. Okay, like in our current case, like in our current client, they were using 11i up to 2016, and then we have upgraded to release 12. So they have been using for Oracle for last more than 10 or 11 years. They are already, like all the users are already trained and they know what to do. It's only like, of course, this primary and second ledger concept came into picture only in what do you call release 12, but they were properly trained during the time of implementation. Yes, you are right. Like there was some kind of initial confusion during the first or 2 months of our go live, but now all the users are properly trained. They understand what they are doing, and now it's now almost like 9 months after go live. Now we don't have any issues there.
And and Arvind, from a user perspective, so if they're entering a journal in the INR ledger, okay, in INR, okay, so they will get automatically copied to the secondary ledger also, right?
Yes.
So copied in the sense they will get posted and everything is done automatically, or they'll have to go back, run the postings and everything also in the secondary ledger.
Okay, so when I come to this particular topic in a little while today, I'll get into the details, right? So now, like at a high level, understand that whatever is there in the primary ledger gets automatically copied to the second ledger. So when I say automatically copied to second ledger, I mean in some cases you need to run some programs, in some cases you need to schedule some programs. Okay, but at a high level, the data in the primary ledger should get pushed into second ledger. Okay, and what are those programs, at what stage you need to run those program, and those kind of things I'll explain when I get into the second ledger topic. Okay.
Okay.
Okay, for the time being, we will concentrate on the consolidation ledger. Okay. So in our current case, what I did is I have created one consolidation ledger. The name of our consolidation ledger is Reliance Consolidated Ledger. Okay, and the functional currency of my consolidation ledger is INR. Okay, now we got Reliance INR ledger, where the functional currency is INR. Reliance USD ledger, where the functional currency is USD. Reliance CAD ledger, where the functional currency is CAD. Okay. Now there is no translation required for INR. For USD currency or USD ledger, you need to convert into INR, and for Canadian ledger, you need to convert into INR. Okay. And as far as INR is concerned, INR ledger, it's already in INR. Okay. Now once you run this translation process, now all these three ledgers are in INR, and then you can run the consolidation process and push the data into consolidation ledger, where the functional currency is INR. Okay, this is how you can push this data into this consolidation ledger. Okay, so now we need to start with running a translation process in USD ledger, and then translation process in the Canadian ledger. Okay, but before running a translation process, we need to ensure that at least there is some data so that you can see the impact. Obviously, in a live environment, you need not check that because the data is being entered by different users. Okay, for USD ledger, we know that we have been entering the data under USD ledger since last couple of days, so there is some data. Under Canadian ledger, I don't think so. There is any data. Let me check.
Arvind, my screen got stuck actually. Can just give me 2 minutes? I'll just connect back.
Sorry, come again.
Connected. My somehow my meeting got disconnected.
Okay.
I just connected from phone now.
Okay.
Give me 2 minutes. I'll connect back.
Okay, no problem. Yeah, I'll wait. Yeah.
Yeah. Okay. Thanks. Yeah, I'm back now. Sorry. Thanks.
Yeah. Okay. Are you back or again you got disconnected?
No, I'm back.
Okay. Yeah. Okay. So we will check if there is any data in the Canadian ledger, and then we will proceed with the translation process in USD and Canadian ledger. Okay. General ledger. So what I did is I created the USD ledger. I mean, I have already shown you the INR ledger. So similarly for USD ledger, Canadian ledger, and consolidation ledger, I created 3 ledgers, completed all the setups, and created the responsibilities also. Okay. Okay. At least there is one general under Canadian ledger, I think, which is good for us. At least one ledger is enough for us to run the translation and consolidation process. Okay. Now we will run the translation process for the USD ledger. I think we have already ran the translation process for the USD ledger. Okay. Now we'll run the translation process for the Canadian ledger. So before running up the translation process for the Canadian ledger, you should again cross check what exactly are the period end rate and period average rate type assigned at the ledger level. It could be different for the USD and it could be different for the Canadian ledger. So we will double check, and if it is same, then we will check whether there are exchange rates available between Canadian dollar and INR under those period end rate type and period average rate type. Then only you should be able to run the translation. So let us assume you do not enter the what you call exchange rates, and try running the translation, and let's see what will happen. So without entering of any exchange rates, I don't think so there are exchange rates even available in the system. Let me try to run the translation process. See, translation rates are not defined for this period. So this itself says that you should go and enter the period end and period average rate type for your ledger. And I mean, for between your Canadian dollar and INR ledger, so INR currency, then only you can proceed with the translation process. Okay. Again, this is one of the production support issues, like the person who is in charge of entering of the period end or period average rate type did not enter the rates, but there is some other person who is running the translation and he get this message. I mean, looking at the message, you do not even understand what is the translation rates, because it doesn't say that period end or period average rate. It says just a translation rate. So there will be an open ticket. There will be a ticket opened by the user, and so the resolution for this will be enter your period end and period average rate type, and then we need to ask the user to run the translation again. Okay. So first check what is your period end and period average rate type assigned in the ledger. What is your ledger? Reliance USD. So do you remember what is that option, like wherein we need to check the period end and period average rate types?
Ledger options.
Yeah. So ledger option is nothing but this one. Okay. Here you can see even for the Canadian ledger also the period end rate type is corporate and period average rate type is period average one, and we can see that cumulative translation adjustment account is already entered. Okay. So now we need to ensure that under this period end rate type of corporate, we need to enter the exchange rate between Canadian dollar and INR. Similarly, under period average one rate type, we need to mention the or specify the exchange rate between Canadian dollar and INR. Okay, go back to the rates, setup, currencies, rates, daily. Okay, so from currency is Canadian dollar, to currency is INR, and end of the month rate is September 17. Type is corporate, and Rohit can tell me, Rohit, what should be the rate?
It's 53 now.
Yeah.
Increasing.
Okay, 53. Okay. Similarly, for Canadian dollar to INR, 30th of September, period average rate type is period average one. That's the rate type which we have assigned, and average rate could be, I can just say maybe 50. or maybe say 51.5. Okay, ideally, whenever you enter the rates, request should get triggered. I don't know why it did not trigger here in this case. Anyways, okay. So we have completed entering of the exchange rates. Now you can proceed with the running of the translation process. Okay, go to currency translation. Target currency is INR. What is the period which I need to enter here?
September.
Yeah,
September.
September. Click on translate. So now you are not getting any error message because we have entered the period end and period average rates. Wait for this translation program to be completed. Okay, that's fine. While it is running, we'll proceed with other things. Okay, so the first step in the consolidation is ensure that you run the translation process, and the second step is you need to do something called consolidation mapping, and the third step will be running of the consolidation process. Okay, so 3 steps: running of translation, which we have done. Second step is performing consolidation mapping, and third step is running of consolidation process. Okay, so this is done. Now we'll go with the running performing consolidation mapping. Okay, so what is consolidation mapping and why we need to do that? So let me go back to my BR100. So you need to go to the navigation, setup, accounts, chart of accounts mapping. Setup, accounts, chart of accounts mapping. Okay, mapping of primary ledger to consolidation ledger. Okay, so why do we need to go for a mapping? Okay, as you know that now what we are doing, we are actually trying to move the data from one ledger to another ledger. We are now trying to move the data from INR ledger to consolidation ledger. We are trying to move the data from USD ledger to consolidation ledger and Canadian ledger to the consolidation ledger. So when you are moving the data, the balances, obviously the chart of accounts of these ledgers can be different as that of your consolidation ledger. Okay, there could be a scenario wherein for all these what you call 3 ledgers, the chart of accounts can have 8 segments and consolidation ledger can have say only 4 segments, or it can have say 6 segments and even the consolidation ledger can have same 6 segments, or it could be 5 segments here, 4 segments there, something like that. Okay, so in the consolidation, in the chart of accounts mapping, you need to map each segment of your primary ledger or each segment of your INR ledger with the consolidation ledger. So my company segment of consolidation ledger should go to the company segment of the consolidation ledger. My second segment, cost center segment of INR ledger should go to the cost center segment of consolidation ledger, and so on. So that is where you actually do a chart of accounts mapping. So if there is a scenario something like you got 8 segments in primary ledger, that is in this example say INR ledger, but whereas in the consolidation ledger there are only 4 segments, then what you do is you will be performing the mapping only for the first 4 segments. That means there will not be any kind of a data gets grouped at the first 4 segments level. There will not be any data for the last 4 segments. So something like, or in our current example, I think we got 6 segments, right? Okay, our segments are company, department, account, sub account, product, intercompany. Okay, so in the consolidation ledger, maybe they are interested in only these 3. Okay, they are not interested in sub account, product, and intercompany. So what will happen is if there is a balance under say company code of say 01, department of say if the latest assume there is a balance under this combination. Account is say 5800, and this is the sub account, product, intercompany. Okay, there is a balance of say 10,000 rupees. Similarly, under the code combination of this is the sub account. Maybe sub account could be 002, product could be 001, 20,000, and I'll take one more example. Okay, so when you do a consolidation process in this scenario, what will happen is the entire 10,000 plus 20,000 plus 30,000, which is 60,000, will get grouped under consolidation ledger as do you understand this? Any questions here?
Yes.
Okay, if you go with this particular
So,
option.
so the meaning is the consolidated ledger, the chart of account is a 3-segment chart of account.
Yes, if you go with this particular option. Okay, let us assume
Okay.
if the primary ledger chart of accounts and consolidation ledger chart of accounts are same, then it will be exactly whatever you can see in your primary ledger, the same thing you can see in the second ledger.
Yeah.
Sorry, not second ledger, sorry, the consolidation ledger. Okay. So whether it's a same number of segments or the segments are different, but you need to definitely do the chart of accounts mapping. So the chart of accounts mapping screen will help the system in understanding whether the segments are same or whether segments are different. Okay. So going back to
Yeah.
And Arvind, in a general scenario, it is different, right?
It need not be. So again, taking our current client as an example, we got the same eight segments, eight chart of account segments in all the 25 primary ledgers. Even in the consolidation ledger also, we got same eight segments in the chart of account structure.
So in the consolidation ledger also, we are basically grouping at account, at the deepest level.
If you take this example, okay, in this example, your primary ledger, which is INR ledger, has got 6 chart of account segments, but whereas consolidation ledger is only 3 segments. Okay, so wherein what you're doing is you are actually grouping them at this particular level, that is company, department, and account level, and a single balance will get into this combination.
Got it.
this level.
Okay.
Yeah.
Hey, but the point, right, just to add on to that discussion, right, Arvind, like in your example, in your current company, you said consolidated ledger is also assigned with the 8-segment structure, right?
Yeah, yeah.
In equal to the other primary ledgers. So what kind, as you mentioned, the consolidated is nothing but to extract the reports from the across the ledgers available in the countries, right?
Yeah.
So, but you cannot, but you don't do any kind of a transactional data in that consolidated ledger anyway. So why we want to go for same ledger, same COA?
Okay, so there are again couple of reasons. If you want to go for the same COA, because for all the 25 ledger you are using the same chart of account structure, so you are doing a kind of a what do you call reporting in all the 25 ledgers at 8-segment structure, and you want to follow the same reporting structure even in the consolidation ledger also, because even though you do not do a data entry, but there could be a requirement wherein you want to do reporting at all the segments level, even in the consolidation ledger in a single view. You will be able to see the data at different segments, that is at sub account level or a product level in the consolidation ledger for all the companies or for all the countries. Okay, that is one view wherein you will have the same chart of accounts as the same chart of accounts in the consolidation ledger as that of your primary ledger. The other view would be like if there could be some companies wherein they say that, oh, in my consolidation ledger, I just want to do a high level reporting. I am not interested at the lowest level reporting, so I want to have only 3 segments. So even my corporate reporting, everything is based on only those three segments. These other three segments were introduced in other ledgers just for a kind of a local reporting to analyze how we are doing at the sub account level or product level. But from a corporate reporting perspective, I'm interested in only these three. That is another view. Then you can go for only three segments in the consolidation ledger. Okay.
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 But in general terms, is there any possibility of having a transaction in consolidated ledger, the typical general entry?
Yes. Again, in our current client, ideally, whatever you have entered in all the 25 primary ledgers get pushed into consolidation ledger. In a normal layman terms, ideally, there should not be any entries in the consolidation ledger, but system will allow you to do a data entry even in the consolidation ledger. So, for some weird business reason, in our current client, even though the data is coming from all the 25 primary ledger, again within the consolidation ledger, they do some kind of an inter-company adjustments or some kind of a moving of the balances from one company to another company and couple of other things. So from a system perspective, yes, that is possible and system will allow. And for some business reason, there are some users who even will do a data entry in the consolidation ledger. But generally, data entry of just a manual or spreadsheet entries in the consolidation ledger, there will not be any kind of a subledger related entries there because you will not be creating any subledgers or you will not be creating any kind of an operating unit or the legal entities under the consolidation ledger.
Okay.
Okay, I understand that system will accept because it's as good as the same responsibility how we have other primary ledgers have. But my point is, I'm much worried as it is the numbers we are talking, right? Like it's the figures, like what we will be reporting to the legal authorities. So if you see that this kind of an entry in the consolidated ledger, in typical term, how do we in a position to answer these things? Like there should be some a strong reason why we are entering into that consolidated ledger with an entries directly. Why can't you push it through primary ledgers?
Okay, so there could be some.
The audit people, because the outsider auditor, when he comes and validate with all these ledgers, he can right away ask this: why you are entering? Are you doing any massaging in terms of the reporting to the legal authorities? These kind of questions obviously will come for these kind of transactions, right?
Yeah. So in a normal client, if you do any kind of a manual journal entry, whether it's a primary ledger or consolidated ledger, for every entry there is a justification. So in our current client, what we do is when a user passes a manual journal entry, in the journal entry screen, maybe I did not show you in my discussion. When you go to the journal entry screen, journals, enter new journal. In that there is a journal entry screen, there is something called attachment. Okay, whenever any user pass a manual journal entry, even in our current client, it is mandatory for them to click on this attachment. Okay, let me just try to enter journal lines.
It's Canada,
Right? Okay, 03. What happened?
04, I think 05.
Oh, Canada is, oh sorry, Canada is 05. Yeah, you're right. And maybe just the cash account. Okay, so whenever we pass any kind of a journal entry, it is mandatory from a business process perspective that you need to put cursor here, click on attachments. Okay, category is what say other some category you can say, and data type is file. So when you select the data type as file, system will ask you to upload a file, click on browse, and this is where they actually put the supporting document, whether it could be an email or a calculation or a justification, whatever it is there in a document, they select that particular file. So in this case, I'll just say I select some file. Okay, click on submit. As the file has been successfully uploaded, yes. Okay, save this. Now try to requery this, then you should be able to see this button changes. Yeah, here you can see there's the button has changed, so that means there are some attachment. So in our case, for any kind of a manual adjustment, the approver who is approving the journal will come to this particular journal screen, click on this attachment, check the justification. And for all the manual adjustment, there is a justification. So there is a business reason for that. And the same justification can be provided to the auditors. So if the auditors see that there are journal entries in the consolidation ledger, they can just pick up a couple of journal entries on a random basis. They can come here, click on the attachments, and then open the attachment and check the justification for passing those entries directly in the consolidation ledger instead of in the concerned primary ledgers. And also there is something called elimination. We are not using the elimination. I'm not covering the elimination functionality in our training session, but there are some elimination process in the GL, and the elimination process generally happens only in the consolidation ledger. Elimination of the intercompany payables and intercompany receivables happens in the consolidation ledger. So even those elimination entries are generated directly in the consolidation ledger. I mean, they are not manual journal entries, but you can use the system elimination functionality. In our current client, for some business reason, they are and because of some limitations with the standard elimination process, they are not using elimination standard Oracle provided elimination process. They are creating a manual journal entries for those elimination process. Okay. So there are valid business reasons and there are valid scenarios wherein it is possible to pass the journal entries directly in the consolidation ledger. And you need not now, as a consultant, you need not get into, I mean, it's better to know what are those entries, but you need not break your head to understand what are those accounting adjustments which will fall under consolidation ledger, because it is up to the business user to pass those entries and they know what to be passed because they are accountants.
Okay. Okay. Yeah.
Okay, now coming back to our discussion. Where are we? Yeah, so we have completed running of translation. Then we need to perform the consolidation mapping. So go to setup, financials, go to your BR100, check the navigation, setup accounts, chart of accounts mapping. Setup accounts, chart of accounts mapping. So you need to do a mapping between INR ledger and consolidation ledger, Canadian ledger and consolidation ledger, USD ledger and consolidation ledger, and you need to use the proper naming convention. The naming convention first we'll start with INR to consolidation ledger. So the naming convention is Reliance INR to Reliance Consol. Okay. What is my target chart of accounts? What is my source chart of accounts? So in our current example, both are same. So what is my target? What is the target and what is the source here? Can you tell me what is the target and what is the source? Target is which ledger and source is which ledger?
Target is consolidated.
Exactly. Target is consolidation ledger and source is the INR ledger. So target being a consolidation ledger, you need to select what exactly is the chart of accounts of the consolidation ledger. So we have used the same chart of accounts. So select Reliance Accounting Flexifill. And source is INR ledger. For INR ledger, we have used the chart of accounts of Reliance Accounting Flexifill. So use the same thing, Reliance Accounting Flexifill. Okay. And then click on something called segment rules. This is the target. This is the source. Okay. How do you want to map each of the target to the source? So this is target. So target is nothing but consolidation. So in the target, we have got 8 segment and the source is also 8 segment. So it is pretty straightforward. Put your cursor here and action, say copy value from company. So what does this mean? What you are saying is copy all the values of the company into the company segment of target. Similarly for the department, copy all the values of the department into department segment of target. Similarly for the account, copy value from, you can use account. Okay. Let us assume that let us assume that in the target, that is the consolidation ledger, there are only 3 segments. Okay. So what will happen in those case? Okay, you will be able to see only 3 segments. Okay, you will not be able to do mapping for other remaining 5 segments. You should be doing mapping only for those 3 segments based on the example whatever I have given earlier. But now in this case, as the target and source are has the same number of chart of account segments, you need to do a mapping for all the segments. If you do not do a mapping for any of the segments, then when you run your consolidation process, you will get an error message. And there is an option called, and I'll also give you an explanation of each of other fields. So if you say, okay, let me complete this. For sub account, again say copy value, use the same sub account. For product, copy value, product, and for intercompany, copy value, intercompany. Save this. Okay. Okay, now coming back to the values. If you say not assigned, you're not mapping that particular segment. So that kind of scenario does not arise. This kind of scenario of not assigned will come into picture if the number of segments of your source and target are different. So in those cases, there will be some segments where you will not be doing any mapping. So there you will be able to see not mapping, not assigned. Copy value we have already seen. And assign single value. So when I say assign single value, what will happen is, maybe we'll use that assign single value for others. Say for take an example for sub account, assign single value, and value could be, say example this. So in this case, if you go with this particular option, what will happen is, irrespective of the any sub account which is used in the source, target will always have 0000. So in this example, if you you are going with an option of 6 chart of account segment in both primary ledger and the consolidation ledger. Okay, so this is the sub account 0000002. Okay, these are 0502. These are the entries which are entered in the primary ledger. If you go with an option of assign single value as 000, then all these 3 account code combination fall under 01 000 5800 00 and other segments. Okay, so that means this particular 002 005 0502 will be replaced with 0002. So you are using a single value of 000. So there could be a business reason wherein like you are using that sub account. We are using the same 8 chart of account segment structure, and the sub account is one of these segment which is used in both consolidation ledger as well as the INR ledger. But that sub account is only for a kind of a local reporting. In the INR ledger, you want to use bifurcate the account into sub account, and you want to do some kind of reporting based on the sub account. So that's the reason why you use 0000 in some cases, 002 in some cases, 0502 in some cases. But in the consolidation ledger, I do not want to get into those details. I just want to use a single value of 0000. Then you can use the option of assign single value, and you can use that.
Okay, and Arvind, in case if in our entry we have different values for product and intercompany, then
okay, as far as the product, okay, let me complete that. Let me just change it back. Okay, so in this example, what do you call account is sub account is 0000, product is 001. Okay, sub account is 002 and product is 001, and in this case, the last row, the sub account is 0502 and product is 001. So your question is, what if the product is 02 here? Answer 03.
yeah.
Okay, if this is the scenario, it gets converted into your consolidation ledger as,
Okay, 3 entries again.
3 entries with the 10,000, but let's see the combination. 10,000, it will be same 20,000, 30,000, and the combination will be, okay, if you observe, the sub account is 000. Okay, product line is changing. Okay, but if you say, if this is the scenario, then it will be 60,000.
Okay.
Okay.
Yeah.
Okay, and there is something called, we have covered all this. There is something called use roll up rules from. So when you go for use roll up rules from, what will happen is you can give a kind of a range. So what we can say is this is generally used when the within the chart of accounts, one of the account is using a different value set. So in this scenario, what will happen is you can say that, okay, okay. So the example would be this is the account, okay. Under primary ledger for under 5800 account, there is a 10,000 balance, 5801 20,000, 5802 30,000. Okay. Now if you go with a assign roll up groups, use roll up rules from, what you can do is you can specify that if the account in primary ledger is 5800, in my consolidation ledger it should be 5800, okay. But if the account is in the primary ledger is 5801, still in consolidation ledger I want it 5800. For 5802 also I want 5800, okay. You need to go, if you go with that particular option for all the accounts, you need to provide a proper mapping, okay. So what will happen is in this case when it gets into consolidation ledger, okay, so they, okay, I think I'll take a different example. 5800 5800 5802 is 5802, okay. So in this case what will happen is in the consolidation ledger, uh, 30,000 30,000, okay. So for 580 and 5800 and 5801 it is mapped to 5800. So this is INR primary and this is consol ledger.
No, but in the second line, the sub account is 0002.
Okay, okay, you are right. Okay. So if it is okay, so if that is the case, you are right. Good catch.
Okay.
But the main thing what you need to observe is the account is 5800. So even though in the primary ledger it is 5800 and 5801, but in the consolidation ledger it is 5800. Okay, so that is what it is. So again, this is also one of the scenarios which I have seen in some clients, wherein like in the primary ledgers they use different accounts 5800. So I'll give an example. So all the 58 series is basically for the salaries account. So 5800 is salaries domestic, 5801 is say salaries international, 5802 is salaries internal, 5803 is salaries external, something like that. So you use different kind of an accounts from your local reporting perspective. But as far as the consolidation ledger is concerned, they say that I just want to use one account which says say salaries. So they just go with say 500 option, 5800 option. So all the 5800 accounts, 5800, 5801, 5802, 5803, all will have the mapping of 5800. So that in the consolidation ledger, I'll have all those expenses under just 5800, which says salaries. I do not want to go that particular breakup because it is always in a consolidation ledger, it is salaries. But it is whether it's a domestic salary or international salary or internal salary or external salary is only just for your local India reporting perspective. Okay. So even I have seen in our current client there is one example like wherein we have got same eight chart of account segments in India ledger as well as the our consolidation ledger in US. So there is one particular account. If I remember it correctly, I think yeah, there is some tax account. In the tax account wherein we have got different kind of taxes. We have got say GST, AP. For some weird business reason, they have created one account for each state, something like that. Tamil Nadu, something like that. So the accounts are something like 58002, 58003, 58004 in our current case, and we got one GST account for just a GST account which says 58000. Okay. So what we have done is, as in the mapping, what we have done is we have mapped all these 58002, 58003, and 5004 under 5800. So that means in the consolidation ledger, I will be able to see everything under 58000. Okay. So that's what is the mapping about. Okay, so this is the mapping between Reliance INR to Reliance Consolidation. We need to do a similar mapping details from primary ledger to the consolidation ledger. So you need to do the similar mapping for USD as well as Canadian dollar. Okay, let me just try to complete that for the other ledgers. I think I did for INR to console we have did just now. Okay, for USD to console, I think I did it couple of days back when I'm testing something. Okay, and let me check for the Reliance CAD. Yeah, I think even for the CAD also I completed that. I use the same options. Okay, so this is also done. This is also done. So the mapping between all the primes. So in our case, we have done 25 such mappings. Reliance INR to Reliance. So it's like INR to our client name, INR to consolidation ledger, KRW to consolidation ledger, JPY to consolidation ledger, and so on. We have 25 such mappings. Okay. So now the mappings are done, and there is one more step left. Set up global consolidation system. Consolidation, define consolidation, that's the navigation. Consolidation, define consolidation. Going back to your BR100. So here again you need to do the similar exercise of whatever we have done for each of those what do you call mappings. Okay, the reason why we are again doing this is earlier we have specified a mapping between the chart of account segment, but we did not clearly specify what is my parent ledger and what is my subsidiary ledger or the child ledger. Okay, so that is what you do in this screen. So again, this is a proper naming convention. You can even put an ABC, but you should follow proper naming convention. I'm not able to copy. Reliance INR to Reliance Console. Okay. So this is where you need to group all those. You need to specify what are the parents and what is the mapping, whatever we have defined. So what is our parent? Reliance Consolidation Ledger. And what is the currency of the consolidation ledger? INR. And what is my subsidiary company? The ledger Reliance INR ledger. Okay. And what is the mapping? Reliance INR to Reliance Console. That's the mapping whatever we have defined earlier. Okay. And there are two kinds of consolidations. Whether you want to do consolidation at the balances level or the transactions level. Okay. For the time being, I'll go with the balances and I'll explain you in a little while what is the difference between the balances method of consolidation and the transactions method of consolidation. Okay. But here you can see there are two options, balances and transactions. Okay. Now, let me do the same mapping for Reliance USD to console. What is our parent? Reliance Console. Functional currency is INR and subsidiary is Reliance USD. And mapping is Reliance USD to Reliance Console. Okay. So here, let us try to change the mapping to transactions and save. You can see an error message. Use transaction method only for ledgers with the same ledger currency. Okay. So what is the significance of this error message? So what it says is, we have three ledgers: INR ledger, USD ledger, and Canadian ledger. For INR ledger, the functional currency is INR. USD ledger, it is USD, and Canadian ledger, it's Canadian dollar. So, what is the functional currency of our consolidation ledger? INR. Okay. So, what system says is, whenever you are doing a consolidation from a ledger where the functional currency is INR and that is matching with the functional currency of the consolidation ledger. Okay, that is in this case the functional currency of INR ledger INR is matching with the functional currency of consolidation ledger INR. In that case, you can go with the consolidation method of balances or transactions. But whereas for all other ledgers where the functional currency is not matching, you can go with a consolidation method of only balances. Now, keeping that in mind, read this error message again. Use the transaction method only for the ledgers with the same ledger currency. So use that particular option of transactions only for those ledgers where the primary ledger's functional currency is matching with the functional currency of the consolidation ledger. Okay, so what is the significance of these transactions and the balances? So now at least you understand that that option can be used only for the ledgers whose functional currency is same as that of your functional currency of consolidation ledger. Okay, now what is the difference between the balances method and the transactions method? So take an example. In INR ledger there are some transactions. Say this is INR primary ledger. Okay, on January 1st you passed an entry, sorry on September 1st September you passed an entry debiting this particular account, which is this is a rent account for say $10,000. Okay, and credited say some cash account. So cash account is 01-00 hyphen I don't remember, I think it's 4810 something. Okay, again on 5th of September you passed same entry but say for say 20,000. Okay, so this is actually 5800 is the rent account. So maybe on 1st of September you paid rent of say $1,000. Again on 5th of September you paid a rent of say another $20,000. It could be arrears or it could be some extra rent or whatever it is. Okay, and again on say 25th of September you again paid rent with say 30,000. Okay, this is INR primary ledger and this is consolidation ledger. If you go with the balances, the consolidation method of transactions, that means exactly all the transactions whatever is there in your primary ledger will get copied as is. Okay, so if there are say 10 lines or if there are 6 lines in your primary ledger, you should be able to see same 6 lines in the consolidation ledger. But if you go with the option of balances, what will happen is there is one entry for the entire account code combination, 60,000 debit, 60,000 credit. Did you get it?
Yes.
Okay, so balances, as
Okay.
the name itself says, you are just picking up the balances and pushing it to consolidation ledger. If you are saying a transactions, you are going at a line level or a transaction level. You are just picking up all the journal lines and just pushing it to consolidation ledger. So in our current client,
And
yeah, let me complete you. In our current client, as I said that we have got 25 primary ledgers. Out of 25 primary ledger, USD is one primary ledger. For all the 24 primary ledgers, remaining 24 primary ledgers, we are going with the balances consolidation method. And for the USD primary ledger, we are going with the transactions consolidation method, because for our consolidation ledger, the functional currency is USD, which is mapping with the functional currency of the USD ledger. Yeah, Pradeep, go ahead.
So in case if the chart of accounts of primary ledger and consolidation are different, then we cannot go with the transaction method, right?
You can go with the transaction method. Yeah, because it all, I mean, see, as far as the chart of accounts are different, you can still go with the transaction method, because they, in the mapping, you can, if the chart of accounts are different, that is already handled in the mapping. You can say how do you want to do a mapping, whether you want to map of 3 segments of the primary to 3 segments of consolidation or whatever it is. The only condition is with regard to functional currency. You should not be able to see any practical difficulty where the chart of accounts being different, and you will not be able to use the what do you call transactions method. Because what will happen is, let us assume in the consolidation ledger there are only 3 segments. You can still go ahead with this, and in this case, if you are going ahead with this transactions method, and there are only 3 segments in consolidation ledger, what will happen is, okay, so this is how the entry gets created.
Okay.
Okay,
So it will not be grouped then.
exactly, it will not be grouped, because no, here the thing is like, as the chart of accounts are 6 segments, here it is showing 3 segments, but it will not be grouped. The reason being, you are going with the transactions method. You are actually mixing 2 things. Okay, if you are going ahead with, say, consolidation balances method, in this case it will be this way. Okay,
Okay.
okay, so we need to select the option of balances. So what I am doing is, in my current example, for all the 3 ledgers, that is even for the USD ledger, I am going ahead with the balances. INR to consolidation ledger, USD to consolidation ledger, and Canadian to consolidation ledger. Parent is Reliance consolidation ledger. INR is the functional currency of the consolidation ledger, and what is my subsidiary? Reliance CAD. Okay, and mapping Reliance CAD to Reliance Consol. Balances method save. Okay, here you need to ensure that you need to check this run journal import. So when you check this run journal import, when the data is coming from all these 3 primary ledgers into consolidation ledger, it goes through your GL interface table. So if you check this checkbox of journal import, it will automatically get imported into your consolidation ledger when you are running your consolidation process. If you do not check this checkbox, then you need to manually run again the journal import process. Okay. Okay. So now going back to the points, whatever I mentioned.
One quick question, Arvind. Can you go back to that screen? There is another checkbox called Create Summary in the consolidation. Create Summary Journals.
Okay, 1 minute. Okay, so as far as this create summary journal entries journals is concerned, I don't think so it will have any impact if you're going with the balances. Okay, if you're going with
my point.
so if you are going with the transactions balances, then if you click on create summary journals, then in a particular day, in a particular journal entry, if there is a same code combination which is used in multiple journals, then it is going to summarize that. So as far as the balances is concerned, there is no impact of that create summary journals. Okay. Okay, so we have completed running of translation, performing of the consolidation mapping, we need to now do the running of the consolidation process. That is the last step, which will pull the data from all the 3 ledgers into consolidation ledger. Okay. Now go to consolidation ledger, general ledger, superledger, Reliance console. There is something called consolidation transfer. Click on data. Click on the drop down. In the drop down, you should be able to see I'm just trying to expand this. Okay. I don't know how this extra got created. Ideally, we should be able to see only 3: Reliance USD to Reliance console. I think this is extra created by mistake. Okay. So you are doing a consolidation from Reliance USD to Reliance console. Select this. Okay. What is the period for which you want to do consolidation? September. Select the same period in the This is the parent ledger, this is the subsidiary ledger. So in this screen, what you are doing is whatever the setups which you have done, based on those setups, you are actually running the consolidation process. Now you are doing a consolidation process of moving the data from USD translated ledger into Reliance consolidated ledger for September period. Click on transfer. A request got triggered. So this is for moving the balance from USD ledger to the consolidation ledger. We need to do similarly for INR ledger as well as the Canadian ledger. This is for INR ledger, September period, transfer. Similarly for INR ledger.
No, Canada.
I think we did it for what are the things? Let me check. I think we ran two. I don't remember what is this. Let me check the output. There is no output. Let me check the log file. Okay, this is Reliance USD to Reliance Console, the first one. And what about this one? Second one, USD to Console is done. Second one is INR to Console. Yeah, you are right. Then we need to do Canada. Reliance Canada to Reliance Console. Period is September. Transfer. So if you observe that as we have checked the general import checkbox, so it is running the consolidation process, and if there is the data, it is also importing that, running the general import program. And once the general import is also completed, now you can get into consolidation ledger, and now you should be able to see all the journals or the balances which got transferred from INR, USD and Canadian ledger into consolidation ledger. Okay, it's completed. Now under general ledger supervisor Reliance console, go to journals, enter, and what is today's date? September 17th. Click on find. You should be able to see three entries. One has come from, so from the naming convention, you can see that this has come from Canadian ledger. This has come from INR ledger. This has come from the USD ledger. So we can put, and you can see that source is consolidation and category is also consolidation. All the journals which are created in the consolidation ledger will have the journal source of consolidation, and category is general. The category is consolidation. You can click on review journal, and then you should be able to see. Even though we have entered, if you observe for say INR, okay, you can see there is one line per combination. Even though here it looks like it's the same, but it's different. See, there is one line per combination because you are doing a balances level consolidation. As we have entered a lot of general entries in the INR ledger, you can see multiple lines here. But whereas in the other what do you call, under USD and Canadian, where we have entered hardly a very few journals, so you should be able to see only few lines. Okay, so this is how.
Quick check, Arvind.
Sorry.
When you do consolidation, right? These three journals, the source and category, how it is defaulting?
Okay, that's a standard.
Do you have any setup?
No, that's a standard functionality for all the journals which come through your consolidation process. Will have the journal source of consolidation and categories consolidation. If you really want to have something else, then it's a customization. You cannot even handle that through SLA, because as you know that subledger accounting or SLA layer is used only for the subledgers, not within the GL. So the only option, if you really want to have a different category, I don't see any reason for that. But if you want, then you need to go for the customization of the entire consolidation process itself.
Okay, and one more thing, where you submitted those transfer, that is it in a single responsibility or individual primary ledger responsibility?
A single responsibility. Better go to the console responsibility, because it's the target ledger wherein you are consolidating the data from all the other primary ledgers. Get into the target responsibility or a target ledger, and then you can run the consolidation. Consolidation transfer data. Okay, and there is something called consolidation transfer data set. Okay, let us assume you do not want to do this exercise for each and every ledger. You do not want to do it for INR, USD, and Canada. You want to do it in a single go. Okay, what you can do is you can click on data set. You can create a consolidation data set. Okay, I can show you how to create a consolidation data set. You can say Reliance console data set. What is my parent? Reliance consolidation ledger. Okay, pick up your Reliance INR, Reliance USD, Reliance Canada. So ignore the first one. I think first one is created by mistake. Okay, save this. Okay, now you are grouping similar to your ledger set. You are grouping all the what you call consolidation mappings under one consolidation set. Okay, and go to this. Earlier we have gone with the navigation of transfer data, and we did it individually for each consolidation for each primary ledger. Now you can go to this data set, pick up your data set, whatever you have created, Reliance consolidation data set. Okay, and parameter is September 17 for the subsidiary ledger, September 17 for the primary ledger. Click on query consolidations. You'll be able to see all these three. Click on transfer. Okay, if I do click on transfer button in a single go, you should be able to do consolidation for all the three primary ledgers. Okay.
Okay. Yeah, but I got that one. One question, Arvind. Since you are doing this flow in the same consolidated ledger responsibility, but this responsibility itself is assigned to consolidated ledger.
Yes.
How
Yeah.
you are able to access the primary ledgers because of mapping or anything other setup?
See, if you go to, based on your question, if I go to say journals, enter new journal, I can do a data entry only for Reliance consolidation ledger. I cannot pick up your INR or USD or Canadian ledger. Only in those screens it is possible for me to pick up other mappings also. Consolidation, say transfer data. Only in these screens it is possible for me to pick up the other mapping, because in the mapping I have mentioned that I have mentioned what is my source and what is my target. So in the target I had already mentioned that consolidation is my target ledger. So that's how all those mappings wherein the target ledger is linked to your consolidation ledger, it is showing in the drop down. Okay, and this is only in this particular screen, not in the data enter screen.
Okay, so in that scenario, how is it in sync with MOAC? Because okay, forget about this data and data set transfer. But when you are defining the consolidation mappings, I understand why this data set and data is able to select other ledgers. Because of the consolidated mapping, you choose an INR, UA, Canadian ledger, and USD ledger in that mapping, right? But even in that mapping also, it is conflicting with the MOAC architecture, right? Because whenever you log in, you're supposed to be access to that particular ledger based on the configuration you did in that MOAC. Isn't it? Or I'm missing here something.
Okay, so that is the reason why I'm saying, if you to answer your question, system is doing what it is expected to do. So if you get into say journals data entry screen, I can select only consolidation ledger. It is not allowing me to do a data entry in other what do you call ledgers. Okay, even when I'm running a report also, if let us assume I just try to run some reports, account analysis report or something like that. See, it is not allowing me to select any other ledger other than the Reliance consolidation ledger. So when you're doing a data entry or whether you're running a report, it is not allowing me to select any ledger other than the Reliance consolidation ledger. But in the consolidation transfer screen also, it is not allowing me to select any other primary ledgers other than these three primary ledgers, because these three primary ledgers are linked to my target consolidation ledger. And through this particular screen, I mean, that is what is expected, right? Through this particular screen, I am doing a consolidation from those three primary or substrate ledgers into my consolidation ledger. So system should allow me. Otherwise I need to individually go to each of those three responsibilities and then run this particular process.
Okay, you can cancel this. Can you go to consolidated mapping? Yeah, I got this this data set and data one clearly, but I want to go for consolidated mapping.
Mapping, chart of accounts mapping.
No, you did the second
Okay.
step in the consolidation, which is the mapping.
Yeah.
Where is the ledger? I mean, there is some ledger we can able to choose, right?
See.
Yeah. So if we define a new consolidation, the subsidiary in the subsidiary, this field doesn't have any restriction based on MOAC.
Okay. So your question is a test, and primary is Reliance Consol INR. See.
Now if you go,
it is showing.
This is incorrect, right?
It is correct. The reason
should not show, right?
No. The reason being, there could be a business reason that in the system there are some other ledgers which are available in the system. Okay. See, these are the so many currencies. See, this being a testing environment, there are so many ledgers created in the system where the translated currency is INR. See, you can see only those translated ledgers where the currency is INR. So if you want to do a kind of a mapping between your Reliance consolidated ledger, so take an example in this case, if I do a mapping between Reliance consolidation ledger and Vision UK INR, okay, and then I complete the other steps also, then in the screen, in the earlier screen, I was instead of able to see only those three, I will be able to see even this Vision UK also, or like this particular test also. Because
so you mean to say based on currency you chosen, since it is INR, so in the system, whatever the ledger having INR currency, those all ledgers will be appearing in this subsidiary LOV.
Exactly. And this being a testing environment, there are so many different ledgers which are created with the translated currency of INR. But in a real world scenario, you will have only your ledgers or your ledgers in the system which has that currency of INR. So maybe that particular one currency or one translated ledger you should be able to see. Okay. Again, bear in mind, this is not contradicting the MOAC. This is only a setup screen. And again, there are certain screens even within the system. Okay. I'll give you another example. I'm in which ledger? Okay. Forget about this one. I'll go to General Ledger Reliance INR. So your expectation is when using this particular responsibility, I should be able to do a data entry or I should be able to run the report only for the INR. Am I right? INR ledger. Am I right?
Yes.
But
yes.
There are certain screens. If I go to account setup manager, where is that account setup? Okay. I should be able to do an inquiry of any ledgers available in the system. And I can even update that. See, it's some ABC ledger, or even we'll take our example itself, Reliance CAD ledger. Okay, I can click on update accounting options. I can make the changes. Okay, there are certain things which are kind of a global level, and there are certain things which behave in a particular way based on the requirement. So sitting in USD ledger, now I should be able to make changes to any setup of the Canadian ledger. But from a reporting perspective, from a data entry perspective, I should be able to do that only for the INR ledger. Make sense?
Okay. It's based on the access. You can do certain forms or pages, based whatever is available for other across ledgers or whatever.
Yeah.
Right? It's the access actually.
Yeah, and again, that's the reason why in most of the clients, the super user is not given to the end user. So there are a couple of different responsibilities which are created. So in our current client, we have got GL super user, GL accountant, GL senior accountant, GL tax accountant, GL inquiry, GL data entry, something like that. For each ledger, we got around 6 set of responsibilities. We got 25 ledgers, so that means 25 into 60, 6, roughly we have got 150 responsibilities. and all the data entry or inquiry or super user, so the senior accountant will not have access to all these menus. So when you are creating a responsibility, you assign a specific menu so that the setup menu is actually removed from that particular menu, and you will have an access to only other data entry screen. So if the setup menu is totally removed, setup or consolidation menu is also removed there. The consolidation setup that is defined is removed there. He'll have access to only transfer. Okay.
Yeah, got it. Got it. Yeah.
So any other questions on the consolidation?
Do we have any specific reports based
For
on consolidation?
we don't have any kind of a specific reports, but as now the data is available in the consolidation, which is like any other ledger, you can run your trial balances, you can run your financial statement generator, you can run your account analysis, or whatever it is. Like it is not like any other ledger. We got the data for all the three ledgers and pulled it into one ledger. Now you can run whatever the reports which you want to run, whether it could be a custom report or a standard report.
Okay.
Okay.